Ed says, I use a rule of thumb of having 20 to 60 positions in my portfolio. Lately, I'm finding that I have so many option legs open that I can't remember why I'm in them or what exit criteria are. Is there a rule of thumb for number of option positions that can be properly managed? I may not even be thinking about this correctly. I appreciate your thoughts. And then Ed had to run. Okay, this depends on who you talk to. I sometimes have coaching sessions, Ed, long-term customers of Power Options, and they call up and say, hey, I'd like to review my portfolio. And can we go through some positions? And I open up the thing, and it's 3 times as long as this. Now, these are some positions that have expired. This is the webinar account. I haven't, updated some. You can see the KHC position expired. The put did. Ritchie Brothers, Masco, Darling, of course. But in any case, I come in and there's 20 to 30 long calls, 15 to 20 covered call positions, 8 or 10 bull puts, 5 to 10 calendar spreads, a butterfly, 3 iron condors, they're paper trading or just actual trading, Ed. And I look at this, and even my eyes that are trained to understand the Power Options portfolio forwards and backwards, my eyes get blurry. Kurt Frankenberg, many of you know, of course, he wrote the blueprint, originally authored the blueprint in the 2000s. Kurt was a customer of Power Options and called me up for a coaching session. He says, hey, I've got a strategy. I want you to show me how I can search by it using your tools. Of course, it's using an in-the-money put that's 150 days out in time. We walk through it. I said, I don't really like what you're doing here. You have no potential for profit. Of course, Kurt and Kurt style said, oh, really? Why don't you join me on a phone call and I'll show you how I make money. So Kurt showed me the walkthrough of what he does with the married put positions, and I showed that to Ernie, and Ernie was so impressed that around 2007, that's why when we partnered up with Kurt and made some enhancements to the blueprint and so on and so forth. What I mean by this and why I'm going through this little history here is that Kurt taught me something very, very important. The first day he actually flew out to Delaware, came to the office, and we sat down and had a discussion that wasn't over the phone. And he just said to me, Mike, what positions are you in? And I said, oh, I've got a couple calendar spreads right now on, I can't even remember, Domino's Pizza, and I can't remember what else I was in, one of the shipping stocks, Diana Shipping or something along those lines. I said, I've got a couple collars here going on Kraft Heinz and Hertz Global and this and that. And I've got a couple credit spreads and an Iron Condor actually on SPX and one on SPY. He says, well, what are your cost basis? I said, well, I don't know. I don't need to know the cost basis. That's why I use the portfolio tools. And he says, okay, you're telling me you have 18 or 19 positions open right now, and you can't tell me the cost basis or break even in each one. And I said, no, that's why I use the portfolio. He says, I don't care what portfolio you have. If you don't know what your break evens are, what your cost basis is on each one of those positions, you're trading too much. Narrow it down. And I started to think about it. As I started to trade the married put positions, Ed, I started to realize that total in my portfolio, 50 to 60% that are in naked puts, 50 to 60% of my portfolio in the married put positions following the blueprint, 12 to 15% in bull put credit spreads, another 10 to 12% in calendar spreads. Even with the Power Options portfolio, to keep in mind what my positions are that when I look at the home page in the morning, and I look at the stocks I have in my watch list number 1 or watch list number 2. These are more the spread positions I'm in. These are the married puts I'm in and so forth. When I see where the price is in my mind, without even looking at the portfolio yet, I know what my break evens are. I know where I need the stock to be. Of course, this is obvious if it's a married put, but I know where I'm comfortable in the range when I see it in the morning without having to go to the portfolio and evaluating my liquidation value, future expiration value, what I'm losing on each individual leg. I found that with the allocations that I mentioned, that doesn't work for everyone. That's not a recommendation, Ed. What I found is that my personal construct is between about 12 to 15. That's my personal limit in all strategies. I use more money for the married puts. It's more capital intensive. So usually I only have 4 to 5 positions open. I usually only have 3 to 4 bull put credit spreads open and maybe 3 to 4 calendar spreads. I might have 1 or 2 long straddles that I'm trading on earnings coming up as sort of a lottery ticket following Ernie's approach to that. And I may have just 1 or 2 long calls sitting out there that I might convert to a calendar spread. And then I may have puts on SPY, puts on SPX if I'm worried about a market downturn to help hedge my spread portfolios, those leverage portfolio positions. And that's essentially it. And it's around 12 to 15 positions. And that was my limit. Anything above that, I started to lose control of just knowing in my mind what the break even was without having to look at a portfolio. This doesn't apply to everyone, Ed, but that was a rule of thumb that Kurt taught me that has stuck with me since 2008, and I've stuck by it. I've tried to master the 3 or 4 techniques, and no one is ever a master. We always keep learning. I learn from you guys every week, I hope you guys learn from me. But trying to perfect the married put approach with that portion of my portfolio, the bull put credit spread approach, but not going beyond the limit of the number of trades that I feel comfortable tracking, even with the power of these portfolio tools. And I bring that up because you had said that you're finding of so many legs, you can't remember why you're in them and what my exit criteria are. Well, that's one of the things you can do in the portfolio is you can track notes here on each individual position. You can put in specific notes as to each trade, each leg adjustment that you made, so you can always reference that as a trading journal. It's right there for you. And of course, in the alerts column, I can always set the alerts here to know I want to be notified if I'm profitable. If Barry hits 72, that's a winner, or Barry drops down to 64, and that's a loser. Or if my put option, the time value, drops down to a lower limit of less than, let's say 4%. Okay, and that's a warning. I'm losing the time period. Or if I'm within 60 days to expiration on that long-term put option. Or if the stock fell below the SMA 20. The stock fell below the SMA 20. It changed direction for the sentiment of the position I'm in, Ed. I'll set those, and I have them right here in the columns. Well, most of them for the upper and lower stock limit. And when an alert's triggered, it shows me. I can go to view, and my time value limit's dropped. So the time value on my put option that I own protecting the position is dropping. So I may need to consider closing it or rolling it further out in time before I start seeing more rapid time decay as I get closer to expiration. And this is a married put position, of course, so that's what I'm looking for. So Ed, I think you want to fine tune, what you think are the most trades you can have. You might be okay with 20. I don't know your trading style. I don't know how you operate, Ed. I know how I operate. And before I met Kurt, I was trying to do too much at once because I was trying to learn too much at once, and I was trying to teach too much at once, and I was trying to have a position open in every strategy that supported PowerOptions that I could trade in my account with the trading approval I had at the time. And that wasn't conducive. I started making profits more consistently and more regularly once I had that discussion with Kurt and that eye-opening thing that he gave me where I could say to myself, yes, looking at it and tracking it and going through it, 12, 13, 14 positions is the max I have in the strategies that I'm trading in my portfolio at any given time. I can keep it in my mind, but I do still use the portfolio to help me with the journal of why I entered the trades, why I did a rollout, why I did an adjustment, why I chose to manage it instead of closing it. And of course, I can see what alerts I've set for upper and lower stop limits, and I can list that in that journal in the notes section so I can keep a trading journal not only of my strategy, the 4 or 5 married puts I have open at a given time, the 3 or 4 bull put credit spreads, the 2 calendar spreads I have open. I use that notes as the journal to sort of keep me in mind and keep me in check for my trading plan going forward as I move on with the positions. So this tool will definitely help you, Ed, but I think you want to take a step back and just maybe start paper trading a little bit with smaller portfolios. Open larger positions, but with larger portion positions, but with 10 different positions. Maybe double the contract size. Maybe that's easier for you to track, even though it looks like now you have more money invested into one position. That's true. You're doing 20 to 60 to probably follow the old rule of the allocation, of course, and spreading everything out. So if you have 60 positions open and one of them takes a 10 or 15% loss, it's not noticed that much in the portfolio. But it works both ways. If I have 60 positions open and one of them goes up 10 or 15%, I have a 10 or 15% profit, that's not bringing the whole portfolio up that much as well. Diversification has its pros and cons. If you have a good trading plan, good protection in place on your positions, married puts or having SPY puts or SPX puts there to hedge the portfolio, maybe opening a bigger position size is okay because you're in less positions now. You can track them, Ed, manage them more easily, and keep a better accounting of your trading plan, your trading journal. That's just one piece of advice. It doesn't mean it's the right piece of advice, Ed. It worked for me. Ernie might say the same thing, but I know he has probably similar to you. He probably has various core holdings that he doesn't consider options positions. They're just stock holdings that he has that sometimes he sells calls against and sometimes he doesn't. His true options positions, naked puts he has, maybe covered calls that he has, straddles, calendar spreads he has, might be under 20 as well. I don't know. I'll check with him on that for you, Ed. But in general, when I hear him talking on the phone with coaching sessions and this question comes up, he gives a response that's very similar to mine. You may want to scale it back again, find out what works for you. Personally, I found out what works for me, and it's that 12 to 15 range with the strategies I'm trying to become the best at that I can and really feel comfortable, which I pretty much am, but feel comfortable right now with when to manage, when to adjust without even having to go to the portfolio, just seeing where the stock price is when I first look at the market open on the power watch list for the stocks that are my married puts, the stocks that are in my spread positions, the stocks that are in my calendars. That's what I use that for there. And I think the portfolio tools will greatly help you with that. Don't get me wrong, but I think you also want to evaluate real quick, Ed, what do you feel is more comfortable level for you? If you feel you're stressed out, you feel you're losing account of it, maybe scale it back. Scale it back to maybe 20 to 15 positions and see how that works for you. You can still be diversified in different strategies. With 15 to 20 positions, it's very easy to do. You can allocate what you want based on your goals and the strategies that you're using, and of course the risk profile, proper position sizing, one of the most important things Kurt also taught me as well, very important in any option strategy. And the portfolio will help you set that up, as well as, of course, our instructions on the various webinars and the products that we have, such as the blueprint, covered call course, and much, much more.